Hey traders, welcome back to the channel. Happy Sunday. It is December 15th. In today's video, we are going to talk about divergence. I'm going to explain to you guys how I use divergence to help me spot poor trade setups. This morning, we just got off the Black Shirt Call, which is a private small group coaching session we do once per week with members of our VIP group. And we spoke a lot about divergence because this is a hot topic since, number one, we have a new course about divergence coming out next month. And number two, it can help even the most advanced traders save money. It can help them avoid bad trade setups. And it actually happened to one of our senior guys last week where I was on vacation. He was looking at a potential trade setup and he lapsed in his analysis and forgot to draw the divergence on the trade that he was looking to potentially take. We're going to actually go into his example right now on GBP CAD because I think there's a lot of value here. And once I show this example to you guys, I'm going to show you two more to really drive the point home. So first, if you've seen my other videos about divergence, you know that I'm a big technical indicator guy. Now, I don't believe in all the indicators. I believe in consistency behind a select few that collect data from different points to help you find confluence or divergence. Confluence meaning all the indicators are telling you to trade the same way. Divergence telling you, hey, something is going to change. So right now, as you see the chart, you only see EMAs, which are these colored lines, and of course my candles, which represent price action. In order for us to draw divergence, we need another indicator. We need an RSI. So I use the TDI. The way that I draw divergence, this is outlined in many videos that I have on YouTube. If you haven't seen them already, it's going to be outlined again in our course. The way that I draw divergence is first you find the RSI high. So I was using yesterday's point here at 1:15 New York time. That was the RSI high. See, if I blow it up, you can see it was slightly higher than the previous high at 9:15. That high was then retested, but not broken, at 1:45 the next day here. At that point, we now had a falling RSI, slightly falling, but still, we have to be binary. Is it yes or no, falling or rising? It's falling. So then what we do to draw either confluence or divergence is we match that trend line that we draw first on the RSI to price action. So the way that I like to label this is the RSI high where you start, that's reaction point 1. Reaction point 2 is going to be price action high, which is here the next day. That divergence where you see price rising and the RSI falling tells us that the market is ready to change. Write that down. It doesn't mean that it's going to reverse all the time. It doesn't tell you how far it's going to reverse, but it does mean that the market is going to change. So now, when he was looking to potentially go long here this morning, when he was watching this trade, and if he had seen the divergence and drawn the divergence, he could have said, wait a minute, we have this divergence building on top with this falling RSI and this rising price action. What does that tell me? Well, what it tells us is to trust the TDI because price action will jab, whether it's to grab orders, hit stops, whatever you want to believe in, that doesn't matter. Price shows this repeatable pattern of setting divergence and then continuing to try to jab. And until divergence is broken, meaning until we got above the purple line here and on the RSI, we would still want to at least give credit to the divergence that's drawn already. So if it's not broken, we want to respect the fact that it doesn't have to reverse and come lower, but that it can change. I hope that makes sense. Divergence doesn't mean a reversal, it means a change is coming. Now, if I fast forward here a couple candles ahead, this is with the replay tool with TradingView, as you can see, we'll speed this up a little bit. As the morning goes on, the trade moves against him. Now, he's saying, Austin, I thought this was a good setup. I thought this was a good formation for me to go long. I thought I could make money on this. Yeah, more often than not, that formation where he took his entry, especially because he used the confirmation on the lower time frame, that's a solid entry. But he ignored the divergence. The markup that he showed me didn't even have the divergence drawn. And that was the first thing that I went at because he and I have had these conversations before where he overlooks the divergence on the higher time frame. So I'm showing you guys here that if he had drawn the divergence, he could have said, you know what, I don't need to take this trade. And instead of going long and losing, he just would have found a better trade setup, which is a win, or not traded at all and not lost, which in my opinion is also a win. So now, I hope you understand this example here on GCAD. Let me show you two more. First, we're going to look at EuroCAD. So here you see RSI high is set, price action goes a little higher. Now we have a rising price action trend line and a falling TDI RSI trend line. What does that mean? Divergence. So as everything is moving higher overnight, and you're probably going to be hearing people talk about, let's go long EuroCAD, let's go long EuroCAD, let's buy it. You have to be smarter to say, let me check the top to see if there's divergence. And what happens? It falls away all day. It never breaks the divergence and it falls away. Starting to click a little bit more. I've got one more example for you. Here, this is Euro USD. This is over 2 days. So this started at like 4 or 5 o'clock in the morning, carries overnight as the RSI just moves sideways. Price is moving higher, grabbing orders, punching higher, trying to break to this 1.111 level, and it can't. RSI can't get above the divergence line. So here, if people are looking to go long off this 50 blue EMA here, going long here today to try to get more rise out of Euro USD, I would be the first one to raise my hand and say, hey, what's the top telling you? Do you have divergence on top? Because if you do, you might end up like this, where it falls away from you all day, pulling that TDI and RSI lower. How did we know this was going to happen? It's so clear, guys. The RSI is moving sideways, if not lower, overnight, while price action is jabbing higher. That is divergent. They are not in agreement. So, do you trade it short? We're going to talk about that in the course next month. But the most important thing that you should do is not trade it long. So I hope that after these 3 examples, you guys kind of have a solid understanding of how to draw divergence. You take the RSI high or low if you're going long or short, and match it to the price action high or low. If those 2 trend lines don't agree, if they don't go in the same direction, that's called divergence. And you don't have to say, oh, reverse, go the other way. You have to say, wait a minute, the market might be changing and I need to be aware of that because I might not want to go long here because if I get stopped, I'm going to know it was divergent and I'm going to know I could have done better. So I hope the video helps. Drop a comment down below. Let me know if this provides a little clarity for you guys. I think it's pretty short, pretty sweet, pretty value-packed. We're excited about the divergence course, so as you guys continue to feed us with questions, we're continuing to refine the divergence course down and get that ready for you guys in January. We're going to be doing a lot of work this week. You're going to hear me talk about it a lot if you're following our Forex Miss all the way up to the Christmas morning. We're going to be talking about it a lot. We have a lot to plan for the seminar coming up in March, but we're almost set on our date. I'm pretty sure we're set on our date. We need to finalize our location. That's why I don't want to speak about it too much yet until it's locked in, and then we're going to share all that information with you guys. So I appreciate the attention always. We really, really do. I can't thank you guys enough. If you're not subscribed already, just hit the red button below me. Give it a big thumbs up too so we can spread the message, spread the divergence information to the rest of the traders in the community. That's always what we're here to do. And if there's anything I can do for you specifically, just hit me up, shoot me a message, shoot me an email. I'm always here to help. I'll see you guys in tomorrow's video.